Welcome to the deep dive. Ever wondered how a massive grocery giant like Kroger is really doing behind the scenes? Today, we're cracking open their latest financial results and strategic plays to get you up to speed on what truly matters. We've got their first quarter 2025 earnings release, the detailed presentation, some analysis from tip ranks, and actually the full conference call transcript. So, plenty to work with.
Yeah, and what's great about having all these pieces is you can really build a comprehensive picture. It's not just about one quarter's numbers, right?
Yeah.
It's about seeing the bigger strategic shifts Kroger's making, and it's a pretty dynamic retail landscape out there.
Absolutely. So our mission today is to cut through the corporate jargon, the financial speak, and just give you the key takeaways. We'll look at what drove their performance recently, how they're handling this cautious consumer environment, and what it all means for your grocery shopping.
All right,
Okay, let's unpack this.
let's do it. Unpacking the first quarter headlines. A snapshot of performance.
Okay, so let's jump straight into the headline numbers. This is for Kroger's first quarter, ended May 24th, 2025. What stood out?
Well, right off the bat, some clear strengths. Identical sales without fuel, it's a really key metric for retailers. They were up 3.2%.
3.2%. Wow, compared to last year.
Yeah, last year, at the same time, it was only 0.5%. So that's a significant jump. Tells you they're managing to get people in the door and spending, even now.
And that wasn't just a blip, right? Didn't they update their guidance based on that?
Exactly. They actually raised their full-year forecast for identical sales without fuel. The new range is 2.25% to 3.25%. That shows some confidence.
Okay. What about profitability? How did the actual operating profit look?
Operating profit came in at $1,322 million. That's up a bit from $1,294 million last year. And their adjusted FIFO operating profit, which kind of smooths out inventory cost changes, it also saw a slight bump. $1,518 million versus $1,499 million.
All right, so profit up slightly. How does that translate down to the bottom line, earnings per share?
Good question. The standard GAAP EPS was flat, actually, $1.29, same as last year. But the adjusted EPS, which analysts often focus on, that increased to $1.49. That's up from $1.43.
With $1.49, and I think I saw that beat expectations.
You did. According to that tip ranks piece, analysts were looking for around $1.45. So yeah, a decent beat there.
Interesting. But then total company sales were actually down slightly, $45.1 billion versus $45.3 billion last year. How does that square with the identical sales growth?
Ah, yeah, that's a key point. You have to remember, last year's number included about $917 million from their specialty pharmacy business.
Which they sold, right.
Exactly. So if you pull out fuel sales and you pull out that pharmacy revenue and some other items, their underlying sales actually increased by 3.7%.
Got it. So the core grocery business is growing. It was just masked by that divestiture.
Precisely. Okay. The drivers behind the numbers. What's working for Kroger?
Okay, so we see the numbers. Now let's dig into the why. What did Kroger's CEO, Ron Sargent, say was really moving the needle?
He called out a few specific areas. Pharmacy was strong, e-commerce saw good growth, and the fresh categories performed well.
Pharmacy, that makes sense with things like the new weight loss drugs, the GLP-1s.
Definitely. They mentioned strong growth from GLP-1s, but also said even excluding those, their sort of organic prescription growth was also solid.
And e-commerce, that seems to be a big focus everywhere.
A huge focus. Their digital sales jumped 15% just in this quarter. 15%.
Wow.
Yeah, and they said delivery was a particularly strong driver there. For a company Kroger size, that's significant momentum.
And fresh, people focusing more on produce, meat.
Seems like it. Identical sales in their fresh departments actually outperformed the center store aisles, the packaged goods. That suggests customers are still prioritizing those healthier, perishable items.
Okay, now here's something I find really interesting. Their own brands. The private selections, Simple Truth.
Oh yeah, the Our Brands business.
Yeah.
That continues to be a real powerhouse for them.
How so?
Well, get this. For the 7th quarter in a row, their own brands grew faster than the national brands on their shelves.
7th. Wow. So people are really choosing the Kroger brand over, say, the big national names.
It seems so. And it's not just about saving money, though that's part of it. They mentioned even their more premium private labels like Simple Truth and Private Selection are doing well. It shows customers trust the quality.
And they're leaning into that, right? Launching new products.
They are. They specifically mentioned introducing 80 new Simple Truth protein products, so they're tapping right into that health and wellness trend with their own label.
Smart. Okay, let's talk margins. Gross margin went up quite a bit to 23.0% from 22.0%. What caused that?
A big chunk of that increase, again, was due to selling this specialty pharmacy, which operated at a different margin profile.
Right.
But importantly, it wasn't just that. They also cited lower shrink, that's theft and spoilage, and reduced supply chain costs as contributing factors.
So even taking the pharmacy sale out of it, margins improved.
Yes. Excluding the pharmacy impact, their FIFO gross margin rate still improved by 33 basis points, so about a third of a percent. That points to real operational improvements.
And the shrink improvement, how are they achieving that?
They mentioned investments in AI-enabled tech and new processes, basically trying to get better visibility into their inventory.
Makes sense. Now, the CFO, David Kennerly, he also talked about overhead costs, the OG&A rate. What happened there?
Right, the operating, general, and admin costs. That rate actually went up as a percentage of sales.
Oh,
Why? Again, the pharmacy sale had an impact because you lose the sales but not all the overhead immediately. But they also made a strategic, accelerated contribution to a multi-employer pension plan.
so investing in pensions.
Yeah. But they did say that productivity improvements elsewhere partially offset that increase. So they're finding efficiencies, but there were some specific cost pressures in the quarter. 3. Strategic moves for the future. Optimizing investing and adapting.
Okay. Moving beyond just the Q1 numbers, what are the bigger strategic plays Kroger is making for the longer term?
Well, one pretty significant announcement was their plan to close about 60 underperforming stores over the next 18 months or so.
60 stores. That sounds like a lot. What's the thinking there?
They're framing it as an optimization effort, basically making the overall store network more efficient and ultimately more profitable. It did lead to a $100 million impairment charge this quarter.
What about the people working in those stores?
That's obviously a key concern. Kroger was very clear in stating that all associates at the affected stores will be offered roles in other nearby locations.
Okay, that's important.
Very. And they also said the modest financial benefit they get from these closures will be reinvested back into the customer experience. So it's not expected to impact their full-year financial outlook.
So it's pruning, but not just shrinking. Are they opening stores too?
Yes, exactly. They're not just closing. They plan to complete 30 major store projects this year. It could be remodels or new builds. And they expect to actually accelerate new store openings in 2026 and beyond, focusing on high-growth areas.
So it's a strategic repositioning, really.
Yeah.
Close the weak ones, invest in the strong ones, and new opportunities.
That seems to be the strategy,
Yeah.
which brings us back to e-commerce. We mentioned the 15% sales growth, which is great, but what about profitability?
Ah, yes. Still the big question mark for many grocery e-commerce operations.
Right. Kroger acknowledged it's not profitable yet. But crucially, they also said it's showing its best profit improvement yet quarter over quarter. So moving in the right direction, but not there yet.
And are they doing anything specific to push that along?
They are. They've actually restructured their leadership, creating a dedicated e-commerce unit under their chief digital officer, Yael Casa. The idea is to unify the whole online experience.
Makes sense. Focus the effort.
Yeah, and the CFO specifically highlighted areas they're working on. New tech deployment, improving the density and efficiency of their fulfillment operations, and growing their retail media platform that's selling ads on their site and app.
Retail media, yeah, that's becoming a big revenue stream for retailers.
Huge. So getting e-commerce to profitability is clearly a major priority.
Okay, one more slightly technical point, but it came up on the call, something about their partner Ocado.
Ah, yes, Ocado, the robotics company that powers many of their automated warehouses.
What was the issue there?
It wasn't really an issue. Ocado drew down the full amount, $152 million, from a letter of credit Kroger had provided.
Okay, meaning...
Kroger clarified this was simply a contractual thing tied to the 7th anniversary of their partnership. It wasn't a sign of problems or anything like that, just part of the agreed-upon funding schedule for those big warehouse investments.
Got it. So business as usual on that front.
Seems so. 4th, navigating the environment. Consumer, labor, and financial flexibility.
All right, let's broaden the view a bit. How is Kroger navigating the overall economic climate? What are they seeing from consumers?
Both the CEO and CFO really emphasized that customers are still being pretty cautious, the economic environment remains uncertain, and people are watching their spending.
How does that show up? Are people trading down?
Yeah, they're seeing folks buy more items on promotion, definitely leaning more into the Our Brands products we talked about, and also eating more meals at home.
Eating at home, because eating out is getting more expensive.
Exactly. They pointed out that food away from home inflation has actually been higher than grocery store inflation for, I think it was 27 straight months. So cooking at home looks relatively more attractive.
So how is Kroger responding to that value focus?
Well, they mentioned lowering prices on over 2,000 additional products just this year. And they're also trying to simplify their promotions, make it easier for people to see the savings.
Why lowering prices? How do they do that without killing your margins, especially when they just reported margin improvement?
That's the million-dollar question, isn't it?
Yeah.
The CFO addressed this. He said they expect to achieve these price investments on a margin-neutral basis,
Boing.
meaning they plan to offset the cost of lower prices by using other levers, like getting more people to buy their higher margin, our brands, finding more sourcing savings, improving efficiency. It's a balancing act.
A tightrope walk, it sounds like. Okay, shifting gears slightly. What about labor? Always a big factor for Kroger.
Absolutely. They highlighted that they ratified new agreements covering over 23,000 associates just this quarter, so making progress on locking in contracts.
But there were some negotiations still ongoing, right? Some strikes even.
Yes, negotiations are still underway with the UFCW union for their King Superstores in parts of Colorado, Denver, Pueblo, Colorado Springs. There was a 14-day strike there back in Q1.
So still some friction points.
Seems so. But Kroger also emphasized their investment in wages. They said their average hourly rate is now over $19.50, and it pushes past $25 an hour when you include benefits like healthcare and pensions.
Okay, so they're making the case they're investing in their workforce while navigating these negotiations.
That's the message, yes.
All right, finally, let's touch on their financial strategy overall. What's the plan for shareholders?
Their stated goal is to deliver an 8 to 11% total shareholder return over time. That's a mix of dividends and stock price appreciation. They prioritize investments based on return on invested capital, and importantly, their balance sheet looks pretty healthy. Their key debt ratio, net debt to adjusted EBITDA, is at 1.69.
And their target is?
Their target range is higher, 2.30 to 2.5. So being at 1.69 gives them quite a bit of financial flexibility. They have room to maneuver.
And what about share buybacks? Are they returning cash that way?
They are. They expect to finish up their current $5 billion accelerated share repurchase, or ASR, program by the end of Q3 2025 at the latest.
And after that?
Then they plan to resume buybacks through the open market using the remaining $2.5 billion authorization they have by the end of the fiscal year. So, yes, returning capital to shareholders remains a clear priority.
Outro. Wow, okay. That was quite the deep dive. So, summing it up, we've got strong underlying sales, especially in pharmacy and e-commerce, despite cautious consumers.
Right, and they're playing this optimization game, closing some stores, investing in others, really pushing their own brands.
While also trying to improve e-commerce profitability and investing in price.
And managing labor relations and keeping the balance sheet strong. It's a lot to juggle.
It really is. They're clearly focused on adapting and optimizing in what's still a pretty tough retail environment, investing in customers, associates, the core business, but always with that eye on the bottom line.
Yeah, that commitment to balancing growth, efficiency, and value, especially with that our brands engine humming and the push on e-commerce. It's a fascinating look at how a giant retailer tries to not just survive, but actually thrive right now.
So as you think about all this, here's maybe a final thought to chew on. In this era where everyone's focused on value, on convenience, how will Kroger's strategy, this mix of aggressive cost cutting in some areas and big investments in the customer experience, how might that fundamentally change the way you actually shop for groceries in the future? Something to consider. Thank you for joining us on this deep dive. We hope this gave you a useful shortcut to understanding Kroger's latest chapter.